Yes, people, good morning, good afternoon, good evening to all South India student. How are you? Hope so you are good. I am also good. So let's guys revise with some important concept of the non-resident taxation, or you can say that NRI taxation. So guys, in our book, if you check that topic number 36, and if you have received the two volume, means you have attended our regular batch, then mostly you have received the two volume, then obviously topic number may be the different. So non-resident taxation. So in non-resident taxation, today we will revise some interesting, or you can say that most important part for your examination. And let's start with the residential status of the company, because residential status of the individual, HUF, AOP, BOI, partnership firm, that is very easy. Now start with the residential status of the company. Sir, how residential status of the company will be determined? So guys, lawmaker says that for residential status of the company, guys, always remember, in case of the Indian company is always resident. Indian company is always resident. Indian company means BB Virtuals Private Limited, Reliance Industries Limited, Adani Limited, like Tata Limited, all are Indian company. Indian company means company incorporated in India under the company's law or any state of the state government. That company is known as the Indian company. So guys, always remember, Indian company is basically always resident. Now we are talking about the foreign company, or you can say that the other company. Sir, other company will be resident or non-resident. So guys, that depends on the poem. Poem is place of effective management and control. In case of the foreign company, if that foreign company poem is located in India, then foreign company is treated as the resident of India. Otherwise, foreign company will be treated as non-resident of India. Now guys, whatever we are going to discuss for the next 15 to 20 minutes, we are going to talk only about the foreign company. Means whatever we are going to discuss for the next 15-20 minutes, now just remember, we are talking about the foreign company only, because Indian company is always resident. Now in case of the foreign company, guys, I can take an example. Suppose there is a one company, name is FCO. There is a one company, name is FCO, and suppose this FCO is located, or you can say that FCO is incorporated in Singapore. So FCO is incorporated in Singapore. Can I say that it's foreign company? So guys, now question is that foreign company will be treated as resident in India or non-resident in India? So here lawmaker says that in case of foreign company, if place of effective management means poem is located in India, then that foreign company is treated as resident in India. Otherwise, that foreign company will be treated as non-resident in India. Now question is that what do you mean by the poem? So guys, poem means a place where key management or commercial decision which are necessary to conduct the business are made. Means place where key management and commercial decision that are necessary for conduct of the business of entity as a whole are made. That place is called poem. But now question is that how we will determine about the poem. So guys, for poem determination, there is a guidelines issued by the CBDT, and that guidelines, there was a circular number 6 and circular number 8 of 2017. But this guidelines is applicable only if that foreign company turnover is more than 50 crore in a year. If that turnover is up to 50 crore then guys, directly that foreign company is treated as non-resident. Remember, if turnover is up to 50 crore then that foreign company directly treated as non-resident. If that foreign company turnover is up to 50 crore, then that foreign company is directly treated as non-resident. But guys, this poem guidelines is applicable when that foreign company turnover in a previous year is more than 50 crore. Now lawmaker says that if two conditions are satisfied, here we are discussing about the guidelines. If two conditions are satisfied, then that company poem will be located outside India. And when poem located outside India, it means that company will be treated as non-resident in India. Now, which two condition? First condition is that majority board meeting held outside India. Means that company, foreign company, majority board meeting held outside India. So that is the first condition. Now, what is the meaning of majority board meeting? So suppose guys, there is a one Singapore based company, and that Singapore based company in a year total 5 board meeting held. Now out of the 5 board meetings, suppose in Singapore they held the 3 meeting, in USA they held the 1 meeting, and in India they held the 1 meeting. So can I say that here majority board meeting held outside India? Because majority here basically total 4 meeting held outside India, only 1 meeting held in India. So I can say that here majority board meeting held outside India. So this condition is satisfied. Or suppose for an example, in Singapore, instead of the, like suppose for an example, in India, suppose 2 meeting held board meeting. In USA, there is a 1 meeting, and in Singapore, there is a 2 meeting. Total meeting is 5. So can I say that out of 5, 3 is a majority? So can I say that majority means 3 meeting held outside India? So that I can say that foreign company majority board meeting held outside India. So here first condition is कि majority board meeting held outside India, and second condition is if ABI test is fulfilled. ABI test means active business outside India test. Active business outside India test. So if majority board meeting held outside India and if ABI test is fulfilled, then I can say that poem is located outside India, or I can say that foreign company will be treated as non-resident in India. But now question is that, sir, what do you mean by the ABI test? What is the meaning of active business outside India test? So guys, here ABI test, for the ABI test, there are 4 conditions. And if all the cumulative 4 conditions are satisfied, then I can say that ABI test is fulfilled. Now, what are the 4 conditions? First condition is says that in that foreign company, in total income, up to 50% is a passive income. Means passive income should be up to 50%, means 50% or less should be the passive income. That is the first condition. So in the ABI test, here first test says that the passive income of that company is within the limit of the 50% of total income. Now your question may be like that, sir, what do you mean by the passive income? So always remember, passive income means like house property income, or I can say that rental income is called your passive income. After that, your capital gain is your passive income. Now, in case of the other sources, that interest, dividend, and royalty is also passive income. But remember, in case of the banking institution or in case of the PFI, whatever interest income, that interest income will be treated as the active income. So first point says that in that foreign company, in the total income, that passive income should be within the 50% limit, means 50% or less income should be the passive income. But what do you mean by the passive income? So guys, remember, in the 5F, only obviously for company salary is not possible. House property rental income is possible, so rental income is passive income. After that, business income is an active income. Business income is active income. Capital gain is a passive income. And in income from other sources, that interest, dividend, and royalty income is treated as your passive income. So what do you mean by the passive income? Like rental income is passive income, capital gain is passive income, interest is a passive income, royalty is a passive income, and your like dividend income is called passive income. But remember, interest income will be treated as active income for the company which is engaged in banking business or public financial institution. Now one more point, guys. Remember, if that company purchase the goods from associate enterprise and sell the goods to associate enterprise, means purchase is also from associate enterprise and sale is also to associate enterprise. So under that transaction, whatever income that income is treated as the passive income. So here purchase from the associate and sale to associates means at the both the leg there is an associate enterprise. Associate enterprise means whatever we have discussed under the transfer pricing. So at both the leg, if there is an associate enterprise and transaction through like from and to the associate enterprise, that transaction income will be treated as your passive income. Suppose that company purchased the goods from associate enterprise and sold to the outsider or unrelated party, that income is active income. Or purchase from outsider and sold to associate enterprise, then that income is also called your active income. So here guys, we have discussed the passive income. So what I am saying that in your total income, that passive income should be within the limit of the 50%. Now passive income is rental income is passive income, capital gain is passive income, dividend is passive income, interest is passive income, royalty income is passive income. As well as if purchase the goods from associate enterprise and sold to associate enterprise, then that income is also treated as your passive income. So here first condition of the ABI test is that passive income should be within the limit of the 50% of total income. Now second condition is in total asset, less than 50% asset should be situated in India. So whatever the total asset of that company, in that asset, less than 50% asset should be situated in India. Third condition is in total number of employee, means whatever total number of employee in the payroll, less than 50% employee should be located in India or resident in India. So in total number of employee, less than 50% employee located in India or resident in India. And guys, whatever the Indian employee, in total payroll expenditure for Indian employee, that payroll expenditure should be within the like less than 50%. So payroll expenses incurred for such employee, that Indian employee, should be less than 50% of total payroll expenditure. Guys, if all these 4 conditions are satisfied, then we can say that ABI test is fulfilled. So guys, we are discussing about the foreign company. In case of the foreign company, guys, if two conditions are satisfied, then we can say that POEM is located outside India and that foreign company will be treated as non-resident in India. Now, which two conditions? First condition is that majority board meeting held outside India, and second is ABOI test is fulfilled. Now, in the ABOI test, there are four conditions. One is the passive income should be within the limit of 50% of total income. Second condition, less than 50% asset located in India. Third condition, less than 50% employee are situated in India or resident in India. And whatever the Indian employee, total payroll expenditure, less than 50% expenditure for the Indian employee. If all the four conditions satisfied, then we can say that like ABOI test is fulfilled. Now, ABOI test is fulfilled and majority board meeting held outside India, then I can say that POEM is located outside India and that company will be treated as the non-resident in India. You got my point or not? Yes. Now, next part is related to, sir, income. Because you are talking about that income. Income is, sir, which income? Because less than 50%, like 50% or less income should be the passive income, means within the limit of 50% should be the passive income. So how you will determine the income? So guys, income you have to consider as per the tax law of the country of incorporation. Means suppose that company is incorporated in Singapore, then whatever the income as per the Singaporean tax law, Singapore tax law, that income you have to consider. But suppose in Singapore there is no tax law, then whatever the income as per the company law of the Singapore, that income will be considered to determine the POEM. Now, next part is related to value of assets. So, sir, you are saying that like less than 50% asset located in India, but how we will consider the value of asset? So, guys, it's very simple. For the depreciable asset, take the average of the opening and closing WDV. For the depreciable asset means in case of the building or in case of plant and machinery, furniture and TIG, just take the average of opening and closing WDV. And guys, in case of any other asset, just take the book value. Now, next part is number of employees. Sir, how we will check the number of employees? Because in India, that number of employees should be less than 50%. So for number and employee, just do one thing. Whatever the number at the starting of the year and at the end of the year, just take the average number. So for an example, at the starting of the year, that company was having the 1000 employee, and guys, at the end of the year, there is a 900 employee. So can I say that 950 is total average? Now, out of this employee, how many employee are located in India? So suppose for an example, in India, starting 400 and at the end 500. So here it is a 450 employee average is located in India. So for the number of employee, how you will check? Just take the average of the opening employee and closing employee, and just you have to take the average of the opening employee and closing employee. That will be the number of employee. Now, how you will consider the payroll expenditure? So payroll expenditure means whatever expenditure incurred for the benefit of the employee. Now that expenditure may include the salary, wages, bonus, all other employee compensation, including pension and social cost borne by the employer. So including the pension and social cost borne by the employer, that will also be considered in the payroll expenditure. You got my point or not? Yes. Now guys, one more point. All people pay attention. What I am saying, if two conditions are satisfied, then guys, this company POEM will be located outside India and that company is a non-resident. One is the ABOI test is fulfilled and second is majority board meeting held outside India. But guys, if suppose both the conditions are satisfied, means majority board meeting held outside India and ABOI test is also fulfilled. But guys, suppose that board of director of that company is not having power to take decision. Means board of director of that company is not having sufficient power to take the decision, and decision of that company are taken by any person located in India or the holding company in India. Then guys, even both the conditions are satisfied, then also POEM will be located in India. Again, I am repeating this line, try to understand. Guys, if ABOI test is fulfilled, majority board meeting held outside India, then POEM should be located outside India, company should be non-resident. But guys, if both the conditions are satisfied, but suppose that company's board of director is not having sufficient power to take the decision, and crucial decisions are taken by any person located in India or any holding company in India, in that particular case, guys, POEM will be located in India, even both the conditions are satisfied. But guys, many times what happens, suppose holding company is in India and subsidiary company is in the Singapore, but you know that many times what happens, like subsidiary company follow the group policy. Like suppose you are working in the EY India, so EY India is follow the group policy of the EY USA, UI, UK and all. So that has happened now. So many times what happens, like holding company, whatever decide the policy, that policy is Policy is as it is followed by the subsidiary company, or you can say that group company, like your payroll policy, accounting policy, HR policy, IT infrastructure policy, network platform policy, supply chain policy, routine banking operation procedure, etc., are followed by the subsidiary company. So when it is followed by the subsidiary company, then can we say that here that company is not having the power and everything is exercised by holding company? Answer is no, guys. So here what I'm saying that suppose for an example, any company that the foreign company, they are following the group policy, and suppose holding company is located in India, and that holding company policy as it is followed by the subsidiary company, it means we cannot say that board of director of that company is not taking any decision and all, and decisions are taken by holding company. We cannot say that. But guys, if you are doing this practice for the abusive or aggressive tax planning na, then GAAR provision may apply. GAAR means general anti-avoidance rules, that GAAR provision may apply. You got my point or not? Yes. Okay, guys, one more point. Guys, we have discussed that ABOI test is fulfilled and majority board meeting held outside India, then POEM is located outside India, and that company is treated as non-resident in India. Now we have considered the data of the current year. But guys, for an example, lawmaker says that suppose if data of the 3 year is given na, means current year and last 2 years data, then we have to take the average of the 3 year data and we will check that ABOI test is fulfilled or not. So guys, for the asset, for depreciable asset, we will take average of the current year, opening WDV, closing WDV. Now guys, suppose for an example, you have the 3 year data, then current year average we will take, current year again we will take the average, current current year opening closing WDV average, last year opening closing WDV average, and last to last year opening closing WDV average, and after that you have to take the average of the 3 year data. So what I'm saying that suppose in income that passive income should not be more than the 50% of the total income. So income, current year income, last year income, and last to last year income, 3 year data average we have to consider if 3 year data is given. But guys, as of now in the institute, all the question in the past examination, they have never asked that type of question where 3 year data is given. So if 3 year data is given for the current year and past 2 years, then we have to take the average of the 3 year data. But suppose for an example, sir, we are following the financial year, and suppose that company in that foreign country is following the calendar year, then which year we will consider? So guys, here lawmaker says that whatever the calendar year for that company, whatever the accounting year of that company, that complete in the current financial year. So guys, can I say that for your examination, your current financial year is at 24-25? And that company follows suppose calendar year. So in this year, which calendar year is completed? So in the previous year 24-25, can I say that their calendar year 2024 is completed, 2023 is completed, and 2022 is completed? So you have to consider the average of this 3 year. You got my point or not? Yes. Now next part is, sir, you are saying that ABOI test is fulfilled, majority board meeting held outside India, then POEM is located outside India, that company will be treated as non-resident in India. But suppose if ABOI test is not fulfilled, then if ABOI test is not fulfilled, then sir, what will happen? If ABOI test is not fulfilled, then what will happen? Is that POEM will be located in India? Answer is no. Guys, if ABOI test is not fulfilled now, then AO will check where POEM is located. And AO will determine, first he will identify that who are the key managerial person or key person who took the decision and from where they took the decision. That place will be treated as the POEM. So guys, if ABOI test is not fulfilled now, then here AO will check, income tax department will check who are the person who take the decision of that company, and from where this decision are being made, that place will be treated as the POEM. Now here always who take the decision and from where this decision are taken, that is more important than the decision are implemented. Means where this decisions are implemented, that is not more important. From where this decision are taken by the management, that place is very important, or it is known as the substance over form. Here they will check the substance over form. Now how we will check that who take the decision and from where this decision are being made? So guys, here some situations, some examples are given. Let's see some examples. First is, suppose board of director exercise the authority for the key commercial decision, then what will happen? So suppose for an example, if board of director are exercising the key commercial decision, then we have to check that place where the key decision are taken. Place where the key decision are taken, that place will be the POEM. But suppose this power is delegated to the senior management or any other person, then we have to check the place where such person make the decision. Suppose power is delegated by the board to the executive committee, then we will check that location where executive committee is based and from where that decision are being made by the executive committee. Now, in case of the circular resolution or round robin voting, then we will check the location of the person who has the authority to take decision. Now, what is the round robin voting? Round robin voting means, suppose for an example, electronic voting. So suppose there are 10% and 10% took the decision. So here finally, which person will take the final decision? That place will be the poem. Now guys, here for some matter, shareholder take the decision. Is that will be necessary or that will be important for find out the poem? Answer is no. So for an example, for the merger and acquisition and all, you know that a special resolution is required. So suppose that special resolution, this decision are taken by the shareholder, that where shareholder are take the decision, that is not relevant for determining the poem concept. Now suppose senior person located as principal place of the business, then guys that principal place of the business will be treated as the poem. Now, in case of the decentralized company means, suppose that foreign company is having the office at multiple location in the multiple country, then what will happen? So location where senior managers are primarily based means where MD is located, where your CFO is located, where your CEO is located, that place will be the poem. And return to travel to other location. Now, what is the meaning of return to travel to other location? Return to travel to other location means, normally you know that I am based in the Mumbai. Many times what happens, suppose if I visit to Chennai, I visit to Pune, I visit to the like Delhi, then I always return back to the Mumbai. So Mumbai is my primary place na. So here we will check that foreign company, that company director, MD, CEO and all, whenever they travel to foreign company, then first where they return back. So if return back to any particular country, then their poem is located. Or meet when formulating or deciding the key strategy or policy for the company as a whole, or from at which place they meet when there is a crucial decision they have to take, then at which place they meet, that place will be treated as the poem. Now next part is the senior management may operate from the different location and participate in the various meeting via telephone or video conferencing. Then the location where highest level of management, for example MD or financial director and their direct support staff are located, that place will be located as the poem. And guys, this poem guidelines is applicable only when turnover of that company is more than 50 crore. If it is a 50 crore or less, in that particular case, that company directly will be treated as the non-resident. You got my point or not? Yes. Now guys, next concept in poem is related to the transition mechanism. There is one section that is 115JH. Now guys, from this section still they have not asked any question. If you see in our compiler, there are total 6-7 questions on the poem, but all the questions related to that like ABOI test and all is still on this concept. They have not asked any question. So let's start with the transition mechanism. What is this transition mechanism? Guys, for an example, there is one foreign company. That foreign company is a Singapore based company. Earlier that company was suppose non-resident. Suppose in the current year, previous year 24-25, in this year that company became the poem resident. Means due to the poem, if that company became resident in India, and now guys, if that company became resident in India, then you know that whole world income is taxable. Because if you are resident in India, then global income is going to be taxable. So for that company now, global income is going to be taxable. So when sir, global income is taxable, all income are taxable in India for that company because that company became the resident in India. Then sir, suppose for an example, if there is any brought forward losses or unabsorbed depreciation and all, so is that are also allowed to be set up and carry forward in India or not? Sir, what will be the opening WDV of the asset? Because if that company became resident in India, then now global income is taxable in India. So sir, as on 1st April 2024, what will be the opening WDV of the asset? So here for that purpose, guys, they have given one transition mechanism. So let's start understanding that transition mechanism. And guys, this transition mechanism, there is a notification of CBDT 29/2018. This notification is applicable from 1st April 2017 when this poem concept came into the picture. Now guys, let's understand this concept with the help of the one example. And suppose that example is there is a one foreign company, that name is a FCO, incorporated in the Singapore, and they are the tax resident of that particular country. And guys, first time this company became the poem resident in India in the previous year 24-25. First point is, what about the opening WDV? Sir, which opening WDV we will consider in India? So here lawmaker says that, okay, guys, suppose that company is like assessed to tax in Singapore or not. Suppose that company is also assessed to tax in Singapore. Answer is yes. Suppose as per the Singapore law, as per the Singapore tax law, is depreciation is considered or not? Answer is yes. As per Singapore law also depreciation is considered. So whatever the opening WDV as per the Singapore tax law, opening WDV as per the Singapore tax law, consider as it is that opening WDV in India. So first point is about the opening WDV, means opening WDV of all the asset as on 1/4/2024. So that is 1st April of previous year. Guys, if that company is a tax assessee of Singapore also, now as per their tax law, suppose depreciation is allowed, then whatever the opening WDV as per the Singapore tax law, that as it is opening WDV will be considered in India. But suppose for an example, in the Singapore that depreciation is not considered, then also whatever the WDV as per the Singapore tax law, assuming that depreciation is actually allowed in the Singapore, and whatever the opening WDV as per the Singapore tax law, that will be considered in India. But suppose that company is not a tax assessee of the Singapore, then just take the opening WDV as per the books of account. Then just take the opening WDV as per the books of accounts as per the Singaporean companies law. So whatever the companies law of the Singapore, as per the company law of the Singapore, whatever the WDV, that WDV will be considered in India on 1/4/2024. Now next part. Sir, suppose for an example, there is a brought forward losses or unabsorbed depreciation as per the Singapore law, tax law. Question is that, sir, is that brought forward losses or unabsorbed depreciation will be considered in India or not? Answer is yes. Suppose that company is a tax assessee of the Singapore, then whatever the loss and depreciation as on 1/4/2024 as per the tax record of the Singapore, that will be considered in India. But suppose that company is not a tax assessee of Singapore, then whatever the brought forward losses and unabsorbed depreciation as per the brought forward losses and unabsorbed depreciation as per the books of accounts as per the Singaporean companies law, that will be considered in India. Now guys, suppose for an example that company in the Singapore follow the different year and we follow the different year, because if you know, in India we follow the financial year system, that is previous year system. So our previous year is a start from 1st April 2024 and it will be end by 31st March 2025. Now suppose that company follow the different year, then sir, how we will calculate the unabsorbed depreciation and brought forward losses as on 1/4/2024? How we will calculate? So lawmaker says that, suppose if that company follow the different accounting year and we follow the different accounting year, obviously, then guys, just prepare the profit and loss account and balance sheet from the first day when their accounting year start till the 31st March 2024. Because in the previous year 24-25 that company became the POEM resident in India. So just before this date, 1st April 2024, just before this date is the 31st March 2024. So guys, suppose they follow the accounting year, then guys, you have to prepare the P&L and balance sheet from the 1st Jan 2024 till 31st March 2024. Means this 3-month account, profit and loss account and balance sheet also you have to prepare. And now onwards, every year that company has to prepare their profit and loss account and balance sheet as per the financial year. Means for the financial year, for the previous year, they have to prepare the balance sheet and profit and loss. So what I am saying that, suppose if that company follow the different accounting year, in India we follow the financial year. So in this particular case, whenever their accounting year start till 31st March 2024, they have to prepare the profit and loss account and balance sheet. And guys, now onwards, every time they have to prepare the 12-month profit and loss account and balance sheet as per the financial year. Now one more point. Yes, sir, you are saying that, okay, this year, like 3-month profit and loss account and balance sheet should be prepared. But sir, suppose for an example, there was some losses, that losses incurred in 2018 calendar year. Suppose they follow the calendar year. So in 2018, they have incurred the losses. So sir, how this 8-year period will be calculated? Because suppose losses incurred in the 2018, so can I say that 2019 will be the first year for the carry forward of the losses? This is the first year. 2020 is a second year, 2021 is a third year, 2022 is a fourth year, 2023 is a fifth year, means 19, 19, 20, 21, 22, 23, fifth year. Now 2024, but guys, 24, how you will calculate the 24? For 24 there is a 3-month period, and for the 24 there is a this 12-month period. Now how we will consider, how will you calculate how many years is already like past, because for the remaining period only that losses will be carry forward and set up in India na. So here lawmaker says that when you prepare the account and this particular period, like this particular period is suppose less than 6 months, is this particular period is less than 6 months, then it will be included with the last accounting year. So guys, it will be included. It means you will prepare the profit and loss account and balance sheet for the purpose of set up and carry forward the losses from 1st Jan 2023 till 31st March 2024, means for the 15 month. And this 15 month will be treated as one accounting year for the purpose of set up and carry forward. So guys, can I say that it will be the 5th year? Because losses incurred in 2018. So 2019 was first year, 2020 was second year, 2021 third year, 2022 fourth year, 2023 till 31st March 2024, it will be the 5th year. And now this year will be the 6th year for the setup and carry forward. But suppose if this particular period is 6 months or more, then what will happen? If this period is a 6 month or more, then this will be treated as a separate accounting year for the purpose of set up and carry forward of the losses. Now, one more point here, guys, try to understand. Guys, suppose that unabsorbed depreciation from foreign country and brought forward losses and all, this losses and unabsorbed depreciation can be set off only against the income, which became now taxable due to the POEM concept. Means income, suppose, which is already taxable in India, irrespective of resident or non-resident. Means suppose if there is any income which is accrued or arise in India or received in India, that is the Indian income. So that Indian income is anyway going to be taxable. Again, that income you cannot set up the losses or unabsorbed depreciation which has incurred outside India. So in simple word, whatever your losses or unabsorbed depreciation incurred outside India, that you can set off, but that you can set off only against the income which now became taxable in India due to the POEM concept. You got my point or not? Yes. Now you will read it, now you will able to understand. Now next part is related to the TDS provision. Now TDS provision means, suppose guys, for an example, under the TDS there are certain provision when it is applicable when assessee is a resident, as well as it is applicable when assessee is a foreign company. Now this assessee is a foreign company, but this assessee resident also. Then sir, which section will apply? For an example, I can take an example. Suppose if any professional fees is paid to the resident person, then TDS is applicable under section 194J. But suppose professional fees is paid to the any foreign company, then TDS applicable under section 195. Suppose for an example, contract payment, if anything is paid to the resident, then TDS is applicable under section 194C. But if it is paid to the foreign company, then 195. Then sir, which section will apply? So guys, here section will apply which is applicable only for the foreign company. So in simple word, TDS will be deducted under section 195. You got my point or not? Yes. Now next part is, suppose sir, when that company became the resident in India, then global income is taxable in India. And when global income is taxable in India, means whole world income is taxable in India. And sir, there may be possibility they have paid the taxes in foreign country also. So in India, can they get the DTAA rebate? Answer is yes. So under section 90 or 91 or 90A, we have discussed na DTAA rebate. So if there is a DTAA with foreign country, they will get the rebate under section 90, or if there is a no DTAA, then they will get the rebate under section 91. Now guys, this particular notification is not applicable for the foreign company for the income which is already taxable in India. Means income which is anyway taxable in India, even that foreign company is a non-resident, for that income this particular notification is not applicable. Now guys, under income tax there are certain provisions which are applicable only to foreign company. Is that provision will apply to this foreign company or not? Answer is yes, because company is a foreign company. there are certain provisions which are applicable only to resident assessee. Is that provision will be applicable or not? Answer is yes, because this company is a resident in India. But guys, there are certain provisions which are applicable only to non-resident. Is that provision are applicable to this company? Answer is no. That provision not applicable to this particular company, because this company is a resident in India, not a non-resident in India. You got my point or not? Yes. Now one more point, sir. What will be the tax rate of that foreign company? Because foreign company, now global income is taxable, but tax rate will be applicable of the foreign company only na? And if you remember that foreign company tax rate is a 35%, so 35% will be the tax rate of foreign company. Now what do you mean by the foreign jurisdiction? Foreign jurisdiction means a place where that company is incorporated. Like in our example, we have always, like, took the example of the Singapore based company. So AFCO is incorporated in Singapore, then Singapore will be treated as the foreign tax jurisdiction. You got my point or not? Yes. So this is the completion of our poem concept, and this time in the examination we are expecting that you will get the 5 to 6 mark question from the poem. Then let's discuss remaining part in the next revision lecture.